questions I get is like, well, what am I allowed to do with the self-managed super fund? Or why do I bother? What's the benefit of having a self-managed super fund? So we can have a little quick conversation around that. So a self-managed super fund, it has its own bank account. It has its own tax number. It has its own ABN number. That's kind of where I come in to help lodge those tax returns for someone for their self-managed super fund. What you would do with your super typically is you would contribute money, and now contribution can go into your own self-managed super fund, or they can go into your Q super, your industry super funds that you have out there. A common question I get there is, am I allowed to have both, or do I have to have just one? And the answer is, you can have more than one super account. You can have your own self-managed super fund, you can have your own industry fund. The most important thing to understand is when it comes to contributions, you have annual limits of how much you're allowed to put in, the kind that you can claim a tax deduction for, and the kind that you don't claim a tax deduction for. That's just the kind that comes out of your pocket after tax money that goes into super. So what you want to do with your self-managed super fund is, you have, say for example, 2 members. You're combining the super from other super accounts into your own self-managed super fund. And the part where we talk about, well, why would you bother? Why would you do this for? Typically what I see is because with self-managed super funds, you're allowed to invest into categories or assets that you typically can't do within your big super industry funds. Q-Super are not going to go out and buy a property for you, for example, because they just won't do it. They can't do it. You as a trustee of your own self-managed fund, you can make that choice, as long as it fits within the needs of all the members in your SMSF. When I say needs, I mean as in, does it work with everyone's sort of long-term retirement plan? Is that property going to be worth its while in 15, 20, 25 years when it's ready to be sold? Now, if anyone has a working crystal ball to tell me where the property is going to grow, please tell me. And is it worthwhile? Well, the jury is out in my mind as to whether investing in the property of your SMSF is going to be worth it, but it has to be worth it while it's growing in value, capital growth wise. And if you're investing in an area that's going to give you a good return at the end of it, well, that's worth it. But we don't know that up front, do we? We just kind of do our best to come up with a plan, investment strategy that works for all members at all times. So that's the most important thing, that we have to consider all the needs of the members as well. The other reason why would you have a self-managed super fund, apart from making your own choices, which is a very big one, controlling your decisions, controlling your pathway towards retirement, is that there's a flat tax rate of 15% for your self-managed super fund. So if you had any wealth that you could contribute into your self-managed super fund, you might be taxed at a higher tax rate personally than what your superannuation fund would be taxed on earnings. So essentially, if you have dividends from shares or rents from property, or contributions are taxed at all at 15% in the year that you make those gains or contributions. Interesting thing is though, is that when you get into pension phase, so when you really start drawing money from your super fund, your tax rate actually can go down to 0%. 0% tax rate on all earnings, on income, your capital gains. Now, I should probably add here at this point in time, general information. Please don't take this as my financial advice to go ahead and start setting up an SMSF.